It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, July 13th, 2015. Did you have a good summertime weekend? Boy, they seem to fly by so quickly when the weather's beautiful out there, right? Hope you guys had a very restful, safe, hope you're refocused here now going into a busy week. We got trading ranges galore right now, right? Remember, I talked about this last week. We love trading ranges. Trading ranges, right? We're thinking traps. We got ranges to look for today. Also, how about a new deal for the Greeks, right? We got a supposedly pretty strict deal they got going here now. It's still going to pass through some more channels by Wednesday, and we'll see what this all comes out as. But we can pretty much attribute the equity push higher here today. Thank that, right? You can thank that supposed deal that came out over the weekend. You know me. I'm not going to trade the headlines. I'm going to trade the charts, and that's what we're here to do tonight in tonight's newsletter. Before I jump in, and we have a big important newsletter for you guys, because this is really going to set us up for the rest of the week here this week. It's a summertime week, so we know you got to get to it early, right? Got to get to it early. All right, before we jump into today's charts, though, please remember, everything I'm going to talk about tonight in my video, I teach to all of our students here at schooloftrade.com. Head to schooloftrade.com, check out the free trial. You won't be disappointed. I'll talk more about that on the back end of this video. Second part about this, though, I want to make sure you guys remember to watch this video right now on our trading blog here at sidewaysmarkets.com. Why, you might ask? Well, if you're watching the video on our YouTube page or somewhere else on the interwebs, perfectly fine, but there's a description in that YouTube video. In that description, there's a link to come back to our blog here. 3 reasons why I think you're going to spend some time. I think it's a good idea. First of all, you can download all the charts for today. So all the charts you see me using in tonight's video, you can download those charts right below tonight's video, but you got to go to the blog to get them. Second thing, free pass. Come out in the $10 trade room as a guest. I got a free pass for you guys. I'll make you a member for a day or even a couple days. Invite you out. Right, welcome you in as a guest in our live trade room. And of course, the third thing, that's right, there was 3 here. Who's calling me right now? Don't they know I'm trying to do my newsletter here? Anyways, third thing here, right above my ugly mug, all I need is your name and your email address, and I'll shoot you an email every evening when this nightly newsletter goes live. That way you never have to worry about missing another video ever again. All I need is your name and your email address. Guys, if you grab your free pass, or if you register for the newsletter mailing list, just be aware I'm going to send you a verification email to make sure I've got the right address and to make sure you're not a robot, all right? So make sure you find that inbox and find that verification email, okay? And don't forget about those charts, right? Have them ready for you tomorrow. All right, ready to rock and roll? First day back, Monday through Thursday evening, our nightly newsletter. Let's start with the crude. We never start with crude. Let's start with the crude. The CL, this is my, don't forget, 815 contract. We get a few more drops left on this 815 contract. Don't forget, rollover, you can almost set your watch to it. Usually the 18th of every, how many months, guys? Crude rolls over every 1 month, right? Every 1 month. Gold's going to be every 2 months. That's right, the Euro and the S&P every 3 months. You guys are catching on here fast. Honestly, contract rollover, in my opinion, it's the biggest kind of hurdle between Forex, stocks, and futures, right? When you get over to futures, you got contract rollover because remember, futures markets were built for hedging purposes, right? It's got to roll over. That way people can be forced to re-up and re-hedge. Anyways, bottom line is, today's the 14th, 13th, tomorrow's the 14th. So we still got the rest of this week on the 815 contract, but most likely next week, though, you're going to be doing a rollover on crude. Now you know I warned you. How about the crude here? Crude is bearish, range bound, which means we continue selling the resistance levels at the highs, using those bull traps, and taking profit at support levels near those lows, avoiding the traps in the middle and at the lows of this range. Guys, nothing really has changed with crude oil. Okay, I know the headlines in the newspaper and on the interwebs, they want you to think things are going, right, nothing's changed. We have a bearish bias, very easy, bearish bias into the trading range. That means I'm looking for traps, right? We've had some awesome selling opportunities up near these highs over the past few days. And again, we're going to keep looking for those going forward. So you need to be suspicious of every single rally up to these highs. And that's why I have it marked here. Bull traps, bull traps, bull traps. I don't care how high it goes, right? Let's just say right now news comes out. There's violence in the Middle East. Surprise, surprise. Still wondering why that's news, by the way. Anyways, violence breaks out in the Middle East. Bam, price jumps up. What am I doing? I'm selling it. There's nothing that changes this until we go up, pull back, and hold a pullback. Okay? Now I'm going to show you this. You're going to need to know this again on the S&P, so hold on tight. Because right now we got the S&P taking off, right, in the stratosphere. S&P's in the nosebleed seats right now. It's going to have to pull back. And I'm not going to call that S&P a bull market until it holds that pullback. Okay? We'll get to that one here in a few charts. Bottom line, bearish market on the crude right now. What's the plan? Sell. Sell the highs. How do we sell? What are some ways that we can sell? Well, as the price goes up, my favorite way to sell is going to be a buyer failure. Look for the buyers to try twice, sell right into their stop losses. Another way to sell short here is going to be a reversal pattern. Price goes up, trend line, swing, right? We call it 3-point reversal. Reversal pattern. What's the third way to sell these highs? Wait patiently for it to come back down and sell them rips, right? Sell the retracements. Wave pattern short, right? You know the deal. Well, if you don't know the deal, remember, you don't have to do this on your own. Come out and join me in the trade room tomorrow. I'll walk you right through the whole thing here as a student here at School of Trade. Bottom line, we get a wedge, we get a range. It's all the same stuff. We know we're trading in a narrow consolidated range right now. Keep selling those highs. If you got short up near the highs today, your targets are going to be trend line support, trigger zone support, measured move support. Now, what happens if we end up down near the lows of this range tomorrow? Are we supposed to sit here and just kind of twiddle our thumbs? Well, if you're a seller, you probably should. You definitely don't want to be selling these lows. Okay, so all the bears out there, I hate to ruin the party here, but the easy money is made up near these highs if you're a bear right now. Okay, so bears, hold on tight. What if you're a bull right now? If you're a bull right now, first things first, you got to remember you're going counter trend. Okay, bottom line, what does that mean? Anytime we trade counter trend, there's no such thing as a reliable counter trend setup. Okay, repeat that for me. Write that down. There's no such thing as a reliable counter trend setup. That means some will work and some won't. What that also means is you've got to manage them aggressively. Tight stop, tight first target, get that first target filled, and move that stop up if you're going to be a bull right now trying to buy these lows. How are we going to do it? Well, remember, my favorite way to sell the highs is going to be a buyer failure at the high. Now, who can guess my preferred method of buying this low, again, in a bearish market? Remember, this is going to buy the low, but we're in a bearish bias, so it's lower percentage. You got it. Sell twice, wait for those sellers to try twice and fail, and buy into those stop losses. So what you're looking for is you're looking for bear traps. You're looking for bear traps down at the lows so you can buy right into those stop losses. So sellers, your job right now is to look for bull traps near the highs. Buyers, your job is to be very careful, right? Be very careful, be very disciplined, not to be too aggressive down here. But if you want to be a buyer at these lows, you're looking to buy with bear traps. And what that means is it means wait for sellers to try and fail. And if you have no idea what I'm talking about right now, that will probably tell you you need to come out and join me either as a beginner, intermediate, or an advanced member, okay, whether or not be just a beginner or advanced member in our trade room. That way I'll give you the plan and I'll teach you how to do all of this. You don't need to do this on your own, right? And if you're here to gamble, go to Vegas, right? There's music, there's dancing. It's a lot more fun to lose your money that way. Don't gamble with crude oil. Follow the chart and follow the plan. All right, we get the plan for tomorrow. I'll be trading this market tomorrow morning in our trade room. Really excited to see how we do the rest of this week here with that very well-defined trading range. How about some euro? The 6E, the euro futures. This is my 16 anchor. We're still on the 915 contract. We're going to be on the 915 contract until late September. So don't you worry about us rolling over on euro. Remember, it's just crude coming up here next. Where are we here? Well, we just broke through that support level here just after 6 p.m. Eastern time. Euro is bearish. What a great example on this euro. This is a chart you want to print out, Stick it on the fridge at home and look at this every night at dinner, right? This is a very, very good chart to look at. What do you see here? I see a bearish directional bias. Again, forget about what you're reading in the headlines right now. Forget about what you saw on StockTwits. Remember exactly, read the chart. The chart won't lie. People don't bluff when they put their money in the market. Okay? They do on TV, they do in the newspapers, they do on all the websites all day long. Okay? Show me real money in the market and I'll show you somebody who's telling the truth. Okay? That's why we trust the chart. We don't trust the headlines. Why? Because they're selling advertising. They want to get a reaction out of you. You can't trust it. So we have a bearish bias into a trading range. Very, very similar on crude, right? Very similar to what we just saw. Now what do we see? Bull trap. Bull trap. Look at this. Goes all the way up right to the range expansion. This is last week. This is late last week, right? Thursday, Friday last week. All the way up to the range expansion and then look out below. All the way back down in. But I thought they made a deal in Greece. Why does that change anything? Remember, if this market wants to be bullish, it will show it to us on a chart. I don't care what they say should happen in Greece, right? I talked about it last week. We think we know what's happening, but trade the chart. The chart doesn't lie to us right now. So, euro, bearish, range bound. I'm going to sound like a broken record right now, kids. We know what we're looking to do here right now. We know what we're looking to do. The plan is simple. Keep selling all the breakouts near those highs and look for opportunities to sell when those buyers fail. So if price goes higher here, looking to sell those highs, looking to sell that resistance. Okay, that's where you're going to get the easy money. What if price goes lower though? If price goes lower, this is just like we talked about on crude oil. This is going to be the hardest part. Down near these lows, see, if you take this as an A, B, C, D, get a nice, fat, juicy set of extensions down here. So you're going to see some serious support. Both of those extensions just happen to line up with major levels of support. The first one is a range low. The second one is a major range low, right? That range low comes back from months ago. So we know we have a very, very difficult time selling at these lows. What do you think I should do? Again, I get a bearish bias, so if you're going to be a buyer right now, you've got to remember you're going against the current. That means take a quick profit target, tighten up that stop, lock in a little bit of reward, lock out the risk, and try to hold it back to those highs. It's going to be difficult to get it to go back to those highs because we have a bearish bias on it. So what's the best bet? Seller failure. What I'll be looking for tomorrow in the euro is I'm looking for the sellers to keep trying to force this thing lower, and they might. Let's be honest here. I don't have a crystal ball, right? If you do, call me. I would like to find another one. Mine stopped working a few decades ago. But the bottom line is that we need to see those sellers fail. Now, again, they may not fail, and we may just collapse. And guess what? That's part of the business. Sometimes you're going to miss that move. But I'd rather be on the sidelines wishing I was in that move than trying to sell that low, because the hard part is we never know which attempt is going to be the one that finally breaks through that wall of support right there, right? So again, the highest percentage trade, remember, think like a trader, and traders think in probabilities. Human beings think in potential winning trades, right? A human thinks, well, it might go down here. You're right, it might go there, but it might also go back here. And it's a higher percentage for it going back higher at these lows, okay? So be very, very careful. Do not sell these lows. Okay, well, do whatever you want, but not if you want to keep the money in your account. If you like the money in your account, don't sell those lows. The higher probability trade here is to wait for sellers to try twice and then buy right into those stop losses. Now, by doing it that way, you're going to run those stops. What happens when a bear gets stopped out? It buys its way out, right? A bear hits the buy button if it gets stopped out. So it's going to throw that price right near a quick first target. That'll allow you to wrap up a reward, lock in a reward, and then tighten up that stop as this price goes back towards these highs. Just remember, though, take your profit quickly if you're going to be a buyer at these lows. The best scenario would be a nice run up and give us another shot at these highs here. Okay? The easy money was selling late last week. We got a great continuation on it on the euro right now, and I would definitely expect with that straight line down, I would definitely expect to see this thing start to slowly gravitate back towards these highs, possibly in a flag pattern or a spiking channel or a pennant pattern, okay? So bottom line is right now, look to buy those lows, take a quick profit target, buying into the stops, look for those sellers to fill at the lows, look for the buyers to fill at the highs, and stay the heck away from the middle of this range right now, right? Stay away from the middle. Keep selling. Be suspicious of all the buyers, the highs. Be suspicious of all the sellers, the lows. Get the plan, right? There's our plan. And again, put the newspaper down. By the time you read it on television, it's already too late, okay? Trust me on this. Trust me. If it was that easy, right, all the television producers would be the billionaires out there. They're not. How about the E-mini S&P? Wow, we're going to finish up with gold today. All right, cool. So E-mini S&P, the ES, again, the 915 contract here. Nothing to worry about for rollover here for a few more months. Now, this is a great example. We've seen a lot of really good examples. Crude oil was right in the middle of its range, right? So same thing we saw in crude. Bearish bias into a trading range, right? Nothing different here. Remember, crude oil was in the middle here. Remember the euro? The euro had moved out and then all the way back in. Look at the S&P. See, now you're starting to see the progression of this now. So now we have this breakout. Why did it break out? I don't care why it broke out. Okay, stop worrying about why it broke out. Yeah. They get a new deal in Greece. It sends the Arabia, blah, blah, blah. I get it. But we don't care about that. While you're busy reading it on the internet, you're missing the most important information. By the way, by the time you read it, it's already too late. Trust me. Okay? Or don't. But I'm telling you right now, trade the chart. Don't read the headlines. We know we have a push higher here. Is this a bullish market? No. No. Guys, anybody can put together a one-day rally. Any market in the world can put together a one-day rally. What did I say at the beginning of the video? Can you hold it? Can you hold it, buyers? Right? You know there's going to be some profit taking. Can you hold it after that profit taking? Right? Can we keep it above this 2075? Show me. Prove it to me. Yeah, but you might miss some opportunities though, Joe. What if it keeps going higher? Yeah, well, what if? Right? What if a flock of seagulls attacks my office this afternoon, right? It's like, yeah, you're right. There's all these what if scenarios here. But remember, thinking as a trader means we're thinking in terms of probabilities. We just saw that Euro chart. Hope you didn't miss it. Go back, watch the video again. You'll see it. What happened on the Euro is likely to happen on the S&P. Okay, I'm telling you. Now, you're right. We may go a little bit higher, but we may go much lower. Okay, this is a double-edged sword. We might go higher. You're right. We might go lower. So which one's higher probability? The one going lower. Why? Why do I say that? Because look at the stinking trend going down, right? Look at the trend. The trend going down, right? So, okay. Bearish bias into a trading range. We break out of the trading range. Where are we in this breakout? Well, we haven't quite made it up to that range expansion resistance yet. Remember, that was where the euro ended up collapsing back down, right? So that's always going to be an easy target for you buyers over there. The problem is, though, you can't buy this right now. I mean, you can, but again, if you like the money in your trade account, we'll be wiser now to buy it on a pullback, buy it at a deep discounted price. That way, you basically bank on the fact there is going to be profit taking after this move here. Okay, you know there will be. It can't keep going up forever. Eventually, these bulls got to take their chips off the table, and when they do, price will pull back. Buyers, you need to be waiting for that pullback. Look at how far we've gone. We've already broken through the measured move. I mean, the measured move didn't even blink, right? It didn't even blink at the darn measured move here at 88.5. So we get the measured move broken. We can remove that from the chart. See ya, sucker. Right? That's gone. Next up, we have that 9, give or take here, a tick or two. Let's call that 2100. If I had to guess right now, if it does keep going higher without a pullback, 2100 looks pretty tasty. Okay, so what I'm looking for right now is I'm looking for selling opportunities. Oh my goodness, selling opportunities in this bull move, you're right. But remember, probability-wise, it's much wiser to take this as a short until after we hold the pullback. Once we hold the pullback, then we can go beating our chest if you're a bull right now. But we ain't there yet. So what I'm going to look to do is right now, I'm erring on the side of my bearish trend. What do you think the best way to get short is right now? Just sell it? No, I wouldn't recommend selling it because you know there are going to be people who are going to be buying this. So what I'm going to do is I'm going to wait for a short-term pullback, look for a chance where the buyers try twice, and sell right into those stop losses. What's that called? I'm looking for bull traps, right? I'm looking for opportunities where the buyers are either too greedy or too aggressive, or they're trading their emotions, or they're just simply not experienced enough to know that over a long run, if you buy this move right now, you're going to go broke. Okay? You may not on this one, you may not on the next one either. And that's the crazy part about day trading, is that you can do everything wrong and still make money your first few weeks as a trader. Kind of like the way that I play pool. You know what I mean? I use the wrong side of the pool cue to hit the ball. I mean, I'm horrible at it. But for some crazy reason, I have beginner's luck that allows me to win the first 2 games, and then I fall apart, right? It's no joke, right? If you want to make some money, come bet me on a game of pool. Actually, no, bet me on 5 games of pool. I'm going to win the first 2, and then you can take 3, 4, and 5 and clear me out from there. But the bottom line is, though, stay to the bear side right now if you're a trader in the S&P. Look for the buyers to try and fail, right? Look for the buyers to try and fail, and I'm going to sell it right back down in the same plan we've had on the crude, on the euro, and now on the S&P. Okay? Now, if you are a bull right now and you want to be a buyer, you've got some targets waiting for you overhead. These are some definite targets you need to take seriously. You got, well, again, I would call it 2100, right? Big round number. And then you got the 14, we'll call that 14 quarter. Okay, up top there. So that's going to be your targets if you're a bull right now. I'll be waiting for those buyers to try and fail. If they don't, then, well, at least I followed my plan. But remember, probabilities, targets on the way down. The first target has to be back at that range high. The second target, third target, fourth target will be these green boxes on the way back down. And of course, the final target back down at that range low. E-mini S&P, we're bullish on that Newsom grease, but the bigger picture on the chart tells us there will be bull traps up here. Okay, so beware, which means we're waiting for those buyers to fail, and so we can sell it right back down. We'll be trading this market tomorrow morning with our students here at School of Trade. Come out and join me. And then the little market that could, right? The gold futures, the GC. Very strange. Very strange. This gold market apparently has no desire to react to grease at all. Who knew, right? Who knew? I swear it might be because it's been like, 100 years of this with grease, right? I mean, I absolutely love everything about grease, but this has been going on for a long time, right? So it feels like we get a little taste of the boy who cried wolf right now, where I just don't think the gold's like, yeah, give me some real news here that I can react to right now. There's not a lot that's really surprising, this gold right now. Does this look familiar? It should. It's almost the same chart we've had on pretty much everything else tonight. Gold is bearish, trading inside a range, which means we will keep looking for selling opportunities at resistance levels, looking for traps near those highs, and taking profit at the lows. Should I go through this one more time? You probably don't need it, but you know what I'm looking for. Bull traps, right? Look for those buyers to try to buy those highs. If we get down to these lows, though, what do I need to know about those lows? Stop selling those lows, right? You've got trigger zone, you got range low, you got major support. Now, again, it may push through those range lows, but they're very low percentage. Okay, the probabilities of selling those lows are very low over a long period of time. So I would recommend you don't sell those lows. I am also going to remind you you're in a downtrend right now. So trying to buy those lows means you're going against the trend. What does that mean? That means make it easy on yourself. If you're going to buy these lows, look to buy when the sellers have tried twice and fail. That way you can buy into those stop losses, use a quick first target, clip off a quick profit, lock out the risk, moving your stop up, and then try to hold it to the highs of that range again. Okay, but remember, take that profit quickly. There is no such thing as a counter trend trade that you can rely on. Okay, so get that profit out quickly if you're going to buy those lows. All right, guys, strong bearish trends on everything we see right now. The only market that really has anything going for it to the upside right now is that S&P. But again, it's very questionable whether or not it will continue. Once again, don't forget, download those charts over at sidewaysmarkets.com. And one last thing here, I told you I'd finish up here with this. Head over to schooltrade.com, grab your free trial. All I need from you is a name and an email address, and I'll shoot you over an invite. Come out and test drive our live trade room. While you're here, don't forget, check out our 3 levels of membership. We have a home for everyone, whether you're a brand new trader or you're a grizzled veteran that's just trying to make some money out of these crazy markets these days. And don't forget, we got someone standing by 24/7, 365. Guys, great volatility, but we got ranges. Okay? Plan to trade those ranges this week. Okay? If I don't see you again the rest of the week, now you know the plan this week. I'll keep you updated. Tomorrow morning, 8 a.m. in my trade room. Tomorrow afternoon, 8 p.m. Eastern time, we'll come back and do it all over again. Boy, oh boy, what a great newsletter in store for you guys here this week. Have a great evening. Be nice to each other out there. Be well out there, and I'll see you same time, same place tomorrow. My name is Joseph. Adios, amigos. Bye-bye for now.